Right now, something quietly significant is unfolding in the XRP market that most traders are overlooking. Charts are showing unexpected activity, and the patterns emerging today could be the precursor to a shift that impacts both short-term traders and long-term holders alike. Understanding these moves isn't about chasing hype. It's about decoding the signals that the market itself is sending. In the next few minutes, we're going to break down exactly what's happening, why it matters, and what this could imply for XRP's trajectory in the coming weeks. To start, it's crucial to understand that XRP has always behaved differently from other major cryptocurrencies. Unlike Bitcoin or Ethereum, XRP's movements are often influenced by a combination of liquidity flows from financial institutions, the activity of large holders, and regulatory developments that affect market sentiment. This means that when charts show unusual spikes or sudden consolidations, it isn't random. It's often the market responding to deeper forces that aren't immediately obvious on the surface. Right now, what we're seeing on the charts is a mixture of volume anomalies and price consolidations in areas where XRP historically experienced little friction. On a daily time frame, certain support and resistance levels that traders have relied on for months are suddenly being tested, and the intensity of these tests is unusual. In technical analysis, repeated testing of a level with increasing volume can signal a potential breakout or breakdown. But what's key here is the context. XRP's on-chain data is showing movement from wallets that have historically belonged to large institutional holders, not just retail traders. This isn't just noise, it's activity from players who can move markets. Beyond the numbers, we need to consider why this might be happening now. There's a convergence of factors creating a subtle but meaningful push. Regulatory clarity around Ripple's ongoing cases, coupled with renewed discussions of XRP's utility in cross-border payments, has coincided with increased accumulation by wallets that rarely transact. Meanwhile, smaller traders may be noticing momentum shifts without fully appreciating the broader context. This combination creates a layered market scenario, where technical charts and on-chain behavior together suggest that the coming weeks could see significant positioning. Finally, it's important to approach this with a balanced perspective. Unexpected activity doesn't automatically translate to massive price spikes or instant gains. Instead, it signals a moment of attention, an opportunity to observe how institutional and retail behavior intersect. Traders and investors who understand the patterns, who look beyond the surface price movements, are the ones positioned to interpret these signals effectively. As we continue, we'll break down exactly what these chart signals are telling us and how they might guide strategic decisions without relying on speculation or unfounded predictions. Now, let's dive deeper into the charts themselves because that's where the story really unfolds. When we examine XRP's recent candlestick formations, a few things immediately stand out. First, the intraday volume patterns are atypical compared to the past several months. We're seeing multiple high-volume spikes that occur not at market opens or closes, but during periods that have historically been quieter. This suggests that someone or some entities are intentionally moving positions while the broader market is less active, a tactic often used by larger players to minimize slippage and market impact. Next, if we focus on support and resistance zones, a pattern begins to emerge. There are key levels around $0.60 and $0.70 that have repeatedly acted as a floor and ceiling in previous months. What's unusual now is the speed at which XRP is approaching these zones, coupled with small but consistent breaches that are quickly reclaimed. In technical terms, this is known as a false breakout, and it often precedes larger directional moves because it shakes out weak hands while allowing stronger holders to accumulate or distribute more strategically. Observing these areas in conjunction with volume tells a story. The market is testing the waters, gathering information, and preparing for a move that could catch many traders off guard. On-chain analytics add another layer of insight. We're seeing increased activity in wallets that have held XRP for months or even years without selling. These wallets are moving coins in amounts that aren't typical for daily traders, yet the movements aren't large enough to trigger obvious alarms. This type of micro-positioning can indicate preparation for larger institutional strategies, like staking, liquidity provision, or even early accumulation ahead of anticipated partnerships or market catalysts. Understanding these subtle flows is crucial because they often precede visible trends on the price chart. Another point worth noting is the correlation, or sometimes the lack thereof, between XRP and other major cryptocurrencies. Traditionally, XRP has tended to mirror Bitcoin's movements in the short term, but lately, we're observing periods where XRP is moving independently, creating divergences that traders can exploit. For example, during the past week, Bitcoin's consolidation didn't prevent XRP from testing its upper resistance multiple times. This decoupling is not just interesting, it signals a market where XRP-specific factors, like Ripple's network developments, partnerships, or regulatory updates, are starting to drive momentum more than broader crypto trends. Finally, while charts and data are critical, context is equally important. Unexpected activity on the charts is only meaningful if you understand the forces behind it. Technical formations tell us what is happening, but on-chain flows, wallet behaviors, and market context explain why. By combining these lenses, we can see a nuanced picture of XRP's current environment. One where strategic accumulation, market testing, and institutional interest converge, and it's in these convergences that the most actionable insights emerge, the ones that don't rely on hype but on observing real market dynamics. At this stage, it's important to connect these chart patterns and on-chain signals to practical implications for traders and investors. One of the most overlooked aspects of unexpected activity is the concept of market sentiment shifting beneath the surface. When XRP experiences repeated tests of key levels with subtle volume surges, it's not just a technical pattern, it's a reflection of confidence building among certain market participants. These are the players who understand the asset's fundamentals, who are less swayed by short-term volatility, and who are quietly positioning for potential developments that could play out over weeks or months. Let's consider an example. When large holders, or whales, move XRP into exchanges, it sometimes signals selling pressure. But when similar movements are paired with immediate redistribution or accumulation off exchange, it often indicates strategic repositioning rather than panic. In other words, the market is being quietly engineered in ways that charts alone cannot fully explain. Observing this type of behavior helps sophisticated traders differentiate between genuine sell-offs and controlled liquidity shifts, which can be critical in forming an informed strategy. Another key takeaway from the current chart activity is the importance of timeframes. Short-term traders may focus on hourly or daily candles, reacting to spikes and dips in real time. But when we zoom out to the weekly perspective, the same unexpected activity reveals a different story. Long-term support zones are holding strong, and the recent intraday volatility falls within a broader consolidation range. This means that while day-to-day movements can seem erratic, the underlying trend may still be stable, highlighting opportunities for those who combine technical analysis with a longer-term lens. It's also worth discussing the psychological aspect of these movements. When unexpected activity occurs, many traders react emotionally, interpreting minor fluctuations as signals for drastic action. But experienced observers recognize that markets often move in patterns designed to test conviction. By watching how XRP responds to repeated pressure around key levels, and by noting where volume is concentrated, investors can gain insight into which price points are likely to hold, and which might act as catalysts for a breakout or breakdown. It's a subtle form of market reading, less about prediction and more about understanding the behavior of participants. Finally, as we piece together the technical, on-chain, and psychological factors, a broader narrative emerges. XRP is showing signs of preparation, testing, and strategic positioning that are not random. These are the signals that, when interpreted carefully, provide a framework for making informed decisions. They suggest that the market is moving with purpose, that the unexpected activity is a signal worth watching, and that careful observation now could provide a clearer perspective on how trends may develop in the near term. Looking ahead, the most important question is what this unexpected activity could mean for the coming weeks. While it's impossible to predict exact price movements, we can evaluate scenarios based on patterns, volume, and on-chain flows. One scenario is that XRP continues to consolidate around these key levels, gradually building momentum as institutions and strategic holders position themselves. This kind of quiet accumulation often precedes larger moves, giving early observers a potential advantage if they are paying attention to the signals rather than reacting to noise. Another scenario is that we see a breakout from the current consolidation range, triggered not by retail hype, but by a coordinated release of liquidity or a technical catalyst tied to broader market conditions. In such cases, those who recognize the subtle buildup and understand the levels being tested can identify entry points that are grounded in logic and observed patterns rather than speculation. It's a reminder that patience and careful observation are often as valuable as speed in this type of environment. We should also consider the implications for risk management. Unexpected activity can create opportunities, but it can also generate volatility that catches uninformed traders off guard. By focusing on areas of strong support and resistance, tracking volume spikes, and observing institutional flows, investors can make decisions that are measured and intentional. This is not about chasing every movement. It's about positioning oneself with clarity and awareness, balancing potential reward with a realistic assessment of risk. Ultimately, the lesson here is that markets like XRP are rarely random. Unusual chart activity, when interpreted with both technical insight and context, tells a story about how liquidity, sentiment, and strategy are interacting. For those willing to watch carefully, analyze patiently, and understand the forces at work, these moments provide a window into market behavior that can't be captured by headlines or hype alone. By combining charts, on-chain data, and an understanding of market psychology, investors and traders gain a more complete picture, one that allows for informed decisions rather than reactive ones. As we continue to observe these developments, remember that informed engagement is key. Keep an eye on the charts, track the subtle flows, and consider how institutional movements intersect with your own strategy. If this analysis has helped you see XRP from a new perspective, consider liking this video, subscribing to the channel for ongoing updates, and sharing your thoughts in the comments. Discussion is where insights often deepen, and together, we can interpret the signals that the market is quietly sending.